Hello and welcome to the Indicator Warehouse. In today's video that accompanies this blog post, what I'm going to be doing real quick is just kind of going over and clarifying what I was trying to say in my blog post. Now, as we all know, range-bound markets and slower markets can be very, very difficult to trade. With any system, I personally have found that it's difficult to make a decision on whether to take a trade or not. And frankly, sitting through a slower moving market that lacks a little bit of volatility, I find that in the end, I wind up forcing trades. And well, as we all know, when we force trades, it never bodes well for us or our day trading accounts. So what we're looking at here is I've got two charts and I've got them stacked one on top of the other. The chart on the top is the NQ. The chart on the bottom is the CL. Now, I'm going to ask this simple question. Which one of these charts, looking at what you have to see in front of you, which one of these charts gave the clearer signals, and which one of these charts do you think would have netted you a better day trading day? So I think the answer is pretty simple. It's obviously going to be our NQ chart up on the top. So one of the things I talked about in the blog post is my own personal experience trading the S&P 500. I traded the S&P early on when it was a pretty volatile market. And I used to have, I tell you, some great setups, great moves. And for a while, I did pretty well with the ES. Well, as we all know, the market's changed, and the reason that I'm comparing these two instruments is because I've noticed lately over the last several weeks that the oil market is particularly slow, and it kind of seems a little sloppy to me. Now, this may just be me, okay, and this is just my opinion. However, rather than stick with the CL and allow myself to maybe win a day, lose a day, break even a day, lose a day, win a day, you get where I'm going with it. Rather than beat myself up with a market that isn't moving the way that I like it to see, what I choose to do is I choose to look at two other instruments as well. I keep my eye on the NQ and I keep my eye on the Dow E-mini as well. Now, you can do this with other instruments. Maybe you like gold. Maybe gold is making a better looking chart than what we see here with the CL. Maybe gold is making a better looking chart than what we're seeing here on the NQ. My point is that the decision is really all up to you and what you decide to trade and what you're comfortable with. Now, I don't know about you, but I'm definitely more comfortable trading clean, clear signals with a little bit of volatility mixed in to help that trade maybe go my way. But the bottom line is this: by taking myself out of this slower moving market, and remember, DTS is designed to work with all instruments, stocks, futures, and Forex, okay? And it's all instruments in futures, stocks, or Forex. Rather than just stay stuck with this horrible, range-bound, slow-moving market, what I would rather do is I would rather look around and, for lack of better words, I want to find what's moving, where the players are, and I would rather capitalize on that. So as we can see, we have no really decent patterns, no idea of what direction we're going here. It's just it's headed east, as I like to say. We're not going anywhere. Well, rather than stay stuck with this, what I'll do is I'll take my day and I'll put my focus on another instrument. And for this example, I'm going to use the NQ. As you saw with the other chart, I had no other clear signals, no real clear direction. But I'll tell you what, just by changing instruments, just by moving in a little bit different direction, you can see that I get 1, 2, 3, 4, 5, 6, just entries all day long, because clearly I am in a strong downtrending day. Now, you may accuse me of cherry picking. You know what? That's fine, because I'll be honest with you. That's exactly what I do. When it comes to my money And when I'm risking my money, I want to find the best instrument that I possibly can, the one that's going to fit my trading style, and the one that's going to help me make the clearest decisions. Like I said, DTS is designed for various markets and various instruments. However, we do need to apply some common sense, and let's face it, folks, it's a lot easier to trade, in my opinion, when you're trading a market where you have a clearly defined direction than it is to trade a sideways market. Well, all right, I hope you enjoyed this video, and if you have any questions, please feel free to reach out to me anytime at ray@indicatorwarehouse.com. Thanks, and have a great day.